We'll just share the screen. Guys, let me know when you can see the screen. Can everyone see it? Yeah, just put a thumbs up. Okay, good, perfect. So, okay, cool. So, if you guys seen from when I analyzed the dollar index, we've been pushing up quite a bit. Okay, so the long-term trend is up. However, we had a change of character back in October, and then a break of structure, which confirmed that price is now bearish. Okay, then we had some slow kind of, I'll say, downwards consolidation trend until this area where there was basically our last demand here. If we look on the monthly as well, we can see that this is the area where price had a massive break of structure here. Furthermore, let me put it in as well. So you could see from here to about here, we had a break of structure, okay, to the upside on a monthly. Now, price came into this area here. There might be like a supply zone on maybe a 3-month here. So let's try put that in. Just about, okay. It just barely missed it. Okay, it didn't fully tap into it, but there's liquidity above here. So there must be a reason why price has literally rejected off of this area. However, we've had a break of structure. And so price is literally bullish. The last 3 months have been bullish. It's basically the last couple of years have been bullish, but that's fine to know. Okay, let's drop down to the daily. And we had an accumulation that happened in this area. You can see the change of character that happened, which broke all of this downtrend. And now it looks like price is coming back to take out this trend here. Now this trend originally started from here when it broke this structure. And you can see it's been going in what retail would see as a channel going downwards. However, that looks like it's ended now and price is starting to go up. Now, there was a slight trend line here, which has now been violated, if you guys can see. If we drop down to the 8-hour or the 4-hour, you can see here that this trend line has now been violated. Now, one trick that you guys can use, or something that can help you confirm these breakouts and understanding liquidity, is if there's people trading this trend line, when it gets violated, you have to understand that there's people trading the opposite side of the trend line too. So check this out. When this trend line got violated, guys, there were people that sold the trend line. So as soon as it broke through, they sold it, right? Now, if these people didn't take profit, or maybe their targets were much lower here, price then came back to take them out break even. Now, there are other traders that actually trade retests. So when it retested this trend line, more traders got in and price pushed down for then it to come back up and take them out. So as of right now, it looks like, right, if we just label in everything. Now we look at the index, guys, because I've seen some of you guys trying to trade dollar index. We don't trade the dollar index. We just look at it to kind of give us an overall view of what's going on in the market. So we have this demand zone here that it looks like price is respecting, but you have to see stuff from both angles. So if this is the change of character here for this uptrend, there's also a change of character for the downtrend as well. So we're looking for the last down candle, which could have been this. However, there's a lot of imbalance here. So I would have counted it from here. Okay, so this would have been the change of character to the downside, because we've taken out quite a lot of liquidity by taking out this low. Anyone that was in buys here, they're all gone. Okay, the only people that are still in buys that are holding are from down here, if there are any. So it looks like we've had this change of character here, which actually has tapped into what looks like this supply zone. Okay, and this supply zone looks like it's holding currently. So if price has come into the supply zone and tapped back down, I now understand that I have my ranges of what I want to trade, right? So sometimes you guys get confused. You look at the overall chart, or when you come to the chart, you're not sure what you should trade. You know, you're seeing, okay, cool, this looks like a distribution. As you can see, prices coming down, but what should I focus on a daily basis? So if I'm marking up my highs and my lows in a sense where this is an area, if price comes into this area, I want to buy from. If price comes into this area, I want to sell from. It's just about understanding where is liquidity going to go? Where is liquidity in the market and where is it going to get taken next? So if we look at the 1 hour now, I can see trendline liquidity like this. Okay, you guys need to start adding in your trendline liquidity as well, because this can help you understand where there are traders in the market that you want to target. So for example, we're in this demand zone area here. Now this Asian low hasn't been taken. Okay, I can see it from here. Yeah, so it hasn't been taken. So we can be wary of that. What I can do is I can mark it out. So if I click here, go like this, I know that this is an Asian low that hasn't been taken. Okay, that's fine. Furthermore, I'll mark it black so I can see it, or I'll mark it red. I need to change these colors anyway. Okay, so let's make it bold and make it red. Okay, cool. So now my eye is drawn to that. My idea is that what I'm waiting for is a reaction in this area. Okay, this whole area, because I believe this is a 4-hour demand zone. Yeah, so it's a 4-hour demand zone. Okay, when I drop down to the 30-minute or even 15, I can see that we have a bit of trendline liquidity going up. So it's not like there's a clean order block there, if that makes sense. So look, so there's a trendline liquidity here. On top of that, this whole order block is an Asian zone. So what I would be anticipating happen is something like this. So we can see we're in a downtrend. Price seems to be respecting all of this. It's respected this supply. So I expect price to do this, come in lower, perhaps take out this Asian low, do something like this. And what I would be looking for is how the daily closes. Okay, how the daily closes on this chart. So I would, once that low is taken, I would go back up to the daily and wait to see how the daily candle closes. If it closes as a wick, I would confirm that as buys, and I'd be looking for buys in this area. So right now, I would be bullish on the dollar short term, because I believe, actually, no, I would be bearish on the dollar coming into this demand zone. It looks like it's tapped into it. However, I'm looking for this area here to get taken out properly before I confirm the change of character. Okay, this is what would confirm it for me. And I'm talking about, I want to see price do something like this. So really break it, fill in this imbalance here that you guys can see. And furthermore, break this trend line as well. I mean, break this supply zone as well. So fail that supply. So I want to see something like this. So if I go on the 30-minute, 1 hour, no, 20, in there's a supply zone somewhere. Okay, I can kind of see it on the 10-minute. So basically, I want price to smash through this area, and then it will confirm it for me. We might get something like this, or we might get something like this, which confirms the change of character, comes back in, and then breaks structure. Now, if we do get the change of character, so let's say price moves like this green arrow right here, I don't mind taking a buy off of this. I don't mind taking a buy off of this area here. Okay, buying off of this, risking 1% or maybe less, 0.5, and going for a buy into this area here, basically breaking the trend line. Furthermore, you could actually, if you wanted, hold much higher. So let's say we go for this trade here, put the stop loss below the low, okay, because you want to put it in a place where you're invalidated for the whole trade. Okay, so I'll put my stop loss below all of this in case spread takes me out. Okay, so I'll put it there, aim for this Asian high here, possibly, because that hasn't been taken out yet. And that would give me a nice 1 to 9. Otherwise, you could aim for the other side of this liquidity here, which looks like a equal high as well. So you can see that right here. So this could be a potential equal high right there. Okay, so I can either aim for this high here, which would be a 1 to 6.7, or I can aim for this. If I see a nice change of character in here, a lower time frame, let's say a 5-minute, even a 3-minute. Okay, so let's say we refine it to that, then you can get much better RR, but I'll keep my stop loss in the same place. Okay, so that's a nice 1 to 12. Okay, so waiting for the dollar to come down so that we can buy into this whole trend line. And I suspect this trend line will get deleted and we'll probably come into this supply area here, in which we can see if price is going to either react off of this supply zone like this and then break down further in accordance with the higher time frame. Because look, we've had that change of character already. And so now we'll just be looking for this area to get broken to confirm a break of structure, in which then price can actually continue all the way down into this imbalance, because I still have this area of liquidity here as well. The reason why this is an area of liquidity is because there were breakout traders. Now it has come back down, but there were breakout traders from here. These guys might have been taken out, but the guys from here, this imbalance still hasn't been filled in. It's a massive imbalance furthermore. Okay, I believe I drew that on a daily. That's why it's like that. Or did I do it on a 4-hour? Let's look for it. Okay, I need to start labeling it. Okay, so 2-hour perhaps. Yeah, I think I've done it on the 2-hour. So this is a 2-hour imbalance. I could actually leave it on a higher time frame, but as you guys saw when I was scaling down, because the imbalance is much bigger than it looks. But I would like to scale it down because it cuts out the noise. If I know this area is going to get taken out, I don't really need to focus on it. So that's why I've put it like this. Furthermore, I could actually put it all the way down to here. So I know this area is a massive imbalance area. And actually I can point out my demand much better by using this order block here. And that is the order block I'd be looking to get into this trade from. Okay, so that is my POI. Okay, so a few questions I've been getting as well, which hopefully people will be able to learn from this answer right here on this call. Difference between supply, demand, order block. Order block can be any of these. Okay, order block is just an area where, you know, prices stopped and then reversed, etc. However, supply is above, demand is below, and your POI is the one that you're actually interested in. So this is a demand zone, but I'm not interested in this too much. I have a POI inside here, which is on a lower time frame. Okay, so that was just a quick explanation of that. So now let's look at the euro. So the euro has plummeted into this demand zone here, and it's now rejecting upwards. So I did some analysis on this earlier. Now, there was a trade that I took earlier this week, which I wanted to break down on here as well. Okay. And I did get taken out, but that's fine. I'll still break it down for you guys. So there was a trade last week that I was looking at, and let me go back. Based off this. So I had identified, okay, that there was some trend line liquidity here, okay, right here like this. And there was this imbalance right here. Okay, so I had identified this area right here. And I was looking to sell because I knew that price had been trending downwards, and the way it created all of this liquidity, there's this Asian load that hasn't been taken. I was suspecting that price would go take the high of Asia and then drop. So what happened was, as you guys know, we wait for the high to get taken. So there was a bit of a change of character here, but I wasn't in for the buy because I don't trade London session. However, price started to come up like this. I believe there was news, and then it wicked and it took the low of this kind of area here, but then it changed character. Okay, so I was waiting on the 1 minute and I got a sell entry from around here. Okay, so I got a sell entry based off that. I wait for the price to come back in. So it came back in, tapped me in, and then it started moving down very nicely. And it came to this area. Now I was aiming for these lows here. Okay, these lows here. However, and I'd kind of left the trade. I was doing something else. So I didn't even take partials. Most of you guys know I'm not really a partial trader. But I was aiming for these lows here. But unfortunately, price didn't come there and ended up coming all the way back. Okay. However, in these circumstances, there are times when you've got all the confluences and you know that price is supposed to go in that area or in that direction, right? What I've noticed through my experience is if it doesn't happen on the day that you were in the trade, it's going to happen the next day. It's just about trying to catch that trade. So if I play this out, what happened was it came back and then an Asian session started. Okay. And this is why we say don't hold over Asian session, because my stop loss was above this high. Okay. So by this time I'd already closed anyway, but my stop loss was above this high, right? And it was above this high. I'd even added a few extra pips. So let's just say my stop loss was around here. I'd added a few extra pips. Had I left the trade, yeah, for Asia or whatever, yeah. No, I believe no, my entry was here actually, yeah. And it was just here like this, yeah. Okay. So if we play price out, price was, as you can see, the stop loss got taken out. Now, the Asian session finished. What I would have expected is for price to come take out the Asian high, because if you think about it, all the Asian traders, right, all their sells up until London open are in profit. So I would expect the Asian high to get taken out and then for price to drop. But guys, it's a probability game. So you're not always going to be able to be pinpoint, like accurate and perfect. That didn't happen. London just dropped off and I ended up missing most of the trade. Okay. This is normal. It happens even to myself. Okay. And I was pretty annoyed about that, but it's part of the game. Okay. And let me see if I can show you guys the entry as well. Okay. Just for educational purposes. Okay. Oh, okay, 1 second. So oh, so just quickly, as you guys can see, trading on my MT5 and I got stopped out literally just here, which is annoying, before the whole move. So this is just to show you guys, it happens to all of us. Okay, it happens to any of us. It can happen to me, happens to you. It's normal. I didn't get annoyed. I just thought, okay, this is part of the, this is part of trading. You just move on to the next one. Okay. Now I didn't end up trading for the rest of the week because I had some other stuff going on, but I just want to show you guys that it's normal. If it can happen to me, it can happen. If it happens to you guys, it can happen to me. Okay. The idea is to not get hung up on it and not think, okay, cool, I've done something wrong. Okay. I was expecting the Asian high. Even though the Asian high took out this entry, I could have still expected, and from the strategy, I would have still expected Asian high to get taken and then I can sell again. But unfortunately, that didn't happen. All of this is price action that I could not have anticipated. That's fine. You need to leave room for trading. You need to leave room for not always being right in trading. So this is now liquidity that I expect to get taken out later. Okay. So I expect this to get taken out later on. And prices just dropped off. That's fine. And going forward, based off the analysis we've done of the dollar, what I'm expecting now is for price to come up a bit. Okay. This area here is so if I look on the 8 hour, just what I drew it based off of this demand zone here, this 8 hour demand zone. Okay. you include the wick here. I've explained why in FAQs. Okay, so if you want to understand why I included the bottom of this wick and not like this, you can check in FAQs as well. It's just because if price goes below here, your trade is invalidated, okay? But we have literally just tapped into that area. We are tapping it quite a few times, and this is a massive bearish candle. Okay, this is a whole 6-hour candle going down. So it shows that there's a lot of bearish momentum. So what I would be expecting furthermore going forward is I believe that price may come up a little bit. Let's look at the lower time frames furthermore. Oh wait, no, this is not based off of now, isn't it? Okay, cool. Yeah, my bad, guys. I forgot it was on replay mode. So as you can see, look, but my just understanding liquidity, even though I'd forgotten, I was expecting price to come up a bit. So what's happening right now is price is coming up a bit. It's going to come. I think it's going to take this area here in terms of this liquidity that wasn't taken, because all of these guys are all in profit. All these sellers that traded the breakout, they're all in profit. Anyone that traded a breakout from here is in profit from here up until this point, basically. They've now been stopped out. Okay, that's the liquidity that's getting taken. Somebody's trade is basically reducing as price comes back up. Okay, so at the same time, we're now building upside liquidity as well in the form of this trend line. You could kind of start it from here. Okay, usually it's like a wick situation like this. You could draw it like this, but I like to kind of understand, okay, anyone that got taken out here, they're not in, but who got in after these people got taken out? Anyone in this area. So it's still kind of relevant to have the trend line from here go through this wick, touch this area. And this is how I used to trade retail back in the day, to be honest. So I'm just basically showing you what I used to do back in the day. So now we know there's liquidity here, which is coming to take and mitigate this area. But after it's done that, I believe it will come up to this high and then drop back down. So that lines up with the dollar in terms of coming a bit lower and then going back up. So when the dollar now comes back up in strength, we expect the euro to come back down. Okay. So I would be looking for, I want to see what the Asian session does. And then I'll be looking for buys depending on which, okay, let's say the Asian session is like this. I would look for buys below the Asian low, back up just into this area. I would more likely target this supply zone, even though I have a hunch that the supply will, this trend line will get taken out. Just to be safe, I would exit here, see what happens next, and then trade accordingly like that. Okay. Or if you're a partial trader, you can take some partials here and then see if the rest will run. Okay, so I hope you guys understood that. So that's euro. Okay, so I'm waiting for the Asian session to kind of print and then take a buy from below the Asian low. You can find a demand zone in this area. Let's see if we can find one. It's not really like that great, to be honest. You can see here, there's trend lines in here as well. So if we do that like this, that would be a trend line. And there's an Asian low that hasn't been taken out from here. So we can put that in there as well. So that's an Asian low that hasn't been taken out. I would wait and see what happens actually going forward. I believe the market will open in half an hour. I believe as well next week, the time should go back to normal. I checked on Google earlier today. So the time will go back to normal. So after next week, Sunday, basically, the market will open 10 p.m. as usual. Anyway, let's see what happens here. In terms of US 30, let's see what US 30 has done. So, okay. I think I was back testing here. I haven't looked at it in a while, guys. Yeah. I mostly trade Euro USD. Somebody asked me, what pairs do you trade? I trade Euro USD 90% of the time. Like sometimes that's the only pair I look at in the whole day or the whole week, even the whole month. Okay, cool. So let me just remove all of that. So I believe I'm going to be starting from fresh analysis. So bear with me, guys, yeah, while I'm looking at this. but this will be good for you guys anyway. So, okay, cool. So we have this monthly, we have this change of character and breakup structure that I had from before. This trend line has now been taken out that I've drawn from before as well. It looks like we're tapping into the demand. There's an imbalance here. Okay, there's this imbalance. I can remove this trend line now because it's gone. This equal low is gone as well. Is it going to remove it? Yep. And all these other areas are still relevant. This I can remove. This area is still liquidity. Let's look at the weekly. Price is now filling in this imbalance here. We want to understand how far price can come down before reversing again. So let me look at the 3-day now as well. Okay, it looks like this is the area where there was the change of character. Let me drop down a bit lower. I believe I had this drawn out, but anyway, I'll draw it out again. So this was the change of character, which was right here. And then we had a break of structure here. So this is the lower time frame. This is the higher time frame change of character. So like basically anything above the daily, and higher time frames in terms of like weekly, etc. All of that is up here, but the lower time frame is here. So I can see an imbalance here, which may want to get filled in. This is the high time frame imbalance. I see an imbalance here that may want to get filled in. It's best to kind of keep it out there so you can see. This is the last area that price pushed up in. Okay, I've drawn the area from here. Must be a reason for that as well. So let's look at the 12-hour. Okay, cool. So it's a 12-hour demand zone. And this imbalance is also based off of the 12-hour as well. So if I just line that up now, cool. So now I understand where price can reverse from. That's the reason why I did all of that. So price can reverse from this area here. This is my point of interest. I'm bearish until we get here. I want to buy. So let's drop down to the 8-hour and the 6-hour. What's going on? It looks like we're in a downtrend here. We've had a, let me remove all of this. Change of character from this area here. Oh, that was liquidity that was taken. Okay, that's fine. So we've had, where can I draw this from? Okay, we can say from here, right? Had a change of character in this area. Okay, cool. So we've had a change of character from this area. So just checking the chat. I hadn't checked it. There's like 32 messages. All right, so we've had a change of character from this area, and we can confirm that there was a break of structure from here as well. So price has come in, tapped to this area, and continue down. So now we have a second break of structure again. So this tells me on not really short term, but at the moment we're in a downtrend. Okay, on higher time frames in terms of above, weekly, etc., we're going up, but from a daily perspective going down, we're on a downtrend. So where are potential areas where I can sell? There's an area here, which I'll include. I'm going to refine this in a minute. So I've seen an order block here with a very high wick. So this is a potential POI. And there's this potential area here, but these candles are, it's not a engulfing candle. So what I'll do is I'll drop down to a lower time frame and try and look for the engulfing candle. See guys, can you see, look, even though I drawn it on the 8-hour and I included this wick, the art of including the wick, had I drawn it like this, now when I drop to the 6-hour, look, you can see that the bearish engulfs the bullish candle, and I should include the wick now. But that's why I do it from before. So if we drop to the 4-hour, we might get something even more cleaner. Okay, no, maybe the 2-hour. Okay, you can kind of like refine it to that. Let's see the 1-hour. Let's see the 45-minute. Nope, 30-minute. Okay, so now it starts getting choppy. So I'm going to go down to the 20 to see if we can find something on that. No, 15. Okay, there's kind of like a bearish engulfing here. It doesn't fully engulf of it, but let's see the 10-minute. Okay, so now we have this, yeah? However, based on what I told you guys earlier, if I was to sell from here, I would include this high over here. So I'll put my stop loss above this high, just in case spread wants to, violate me and try and take out all of this. And plus, your trade will be invalidated once it takes out this wick, even though it's mitigated already. Okay. There's times when price literally just wicks all the way above the order block, but it stays within this actual zone, within this high here. So it stays within that, and then you can basically still be in the trade. Okay. So this is the area that I'd want to sell from. I've refined it up until this area, but there's also some areas above as well. If we look on the 4-hour, there is this area here, but there's no real like clean price action. So to be fair, I'm still going to pay attention to this area. Now, what I can also do is, I don't see many of you guys doing this, but you can have like a supply inside a supply. So this is the area I'm mostly interested in, but I'm going to mark out this whole area just in case price wants to come into here and then change of character, but not come into my basically refined supply zone. Okay. So you can do that as well. Now, where do I think price is going to go next? So what I want to start looking for is potential liquidity. I can see potential areas of liquidity above here. I know that there's people's stop losses above there. So I know there's liquidity above here. I can even try and see if I can line up equal highs. So let's see if we can line up some equal highs. Is this equal? Yes, it is. So you can see that there. So there's equal highs here as well. Now, it looks like we're getting a lot of bullish momentum as well. So we're getting slow moves down and then a lot of bullish momentum going upwards. So what I can do as well is be wary of price possibly reversing from this area. Now, although price has taken out liquidity from here, why did it reverse here? Let's see if we can line something up. So there's this demand zone here, and it looks like price has reacted off of that. Okay. Now there is still this imbalance here, but it doesn't mean I should just ignore the place that price has reacted off of. If it reacted off this demand zone, it's for a reason. So what I can do is I can now scale in and see if we're breaking structure. So what I can see is the change of character was here. It's very, very messy, but there was a change of character from this area. The last supply zone could have said was, this is not clean, there's an Asian high there. You could say it's this area here, which has been taken out now, but then prices drop back down again. So what I want to see right now is this area here, is this going to get respected? So now I'm not interested in anything else except buying in this area. So I want to see if we get a change of character here, and then I'll buy it all the way to take out this liquidity here. You can take partials there if you wish, or you can hold it all the way. The smart thing would be to obviously, well, it's up to you, to be honest, depending on what type of trader you are. Okay. Let's see if we can refine this actually. So that's a 20-minute, 30-minute, 10, 5. Okay, so I can refine it here. Right here. Okay, so if I want to take this trade based off of this, put it in just below here. Okay. And aim for these highs here. So I would personally aim for these highs here. I'd be happy with that. That's a nice 1 to 13. If you want to aim higher, you can up here, 1 to 20, up to you. Okay. Or you can take partials here, let the rest run. That's totally fine. So yeah, I can also see an accumulation here. So this can possibly be the spring right here. We had the change of character right after it, so it confirms it for me. So yeah, that's pretty much it, guys. That's US 30 and everything analyzed. I would expect NASDAQ to be doing very similar things as well. It looks like it's moving up and in a similar fashion as well. So I would look for price to come into this demand zone and then buy up if you trade NASDAQ as well. Okay. So that's pretty much it, guys. So now what I'll do is I'll take any questions. If you guys can put your hands up, and if you have your video on, then I will unmute you and you can ask your questions from there. Okay, so we got first question, Ali. Yes, Ali, how you doing?
Yo, man, how you doing? Assalamu alaikum.
Walaikum salam, bro.
So I had a question. Curiosity. So I found a point of interest.
Yep.
It was a 2-minute point of interest, and I was thinking about selling until the Asian low. Would it be possible, and then reverse it to buying?
Yes, you can. You can once you've seen your price or your trade go to the area where you want, and that's your target, you can then basically change your bias and enter a buy. That's fine. So you can sell to the Asian low, or let's say this low, and then you see change of character or whatever it is, whatever reason, and then buy back up. Obviously, make sure it's still based on analysis. Don't just be like, okay, cool, it's come below here, let me just buy now. Make sure
because
it's still based on analysis.
I also saw trend and liquidity below it. So I thought, of course, it's gonna come back down, take the liquidity, and then move up.
Yeah, that's fine. That's fine. Just make sure you still get your confirmation in terms of change of character, etc. Because you don't want to get caught up in just, okay, yeah, it's taking the liquidity, let me just buy it now, etc. Just make sure you still wait for the confirmations. But yeah, you can still trade it.
Also, I had another question. I was looking at Wyckoff. So I thought it's also Wyckoff liquidity. It's also Wyckoff considered liquidity.
Is Wyckoff considered liquidity?
Because when you see Wyckoff, retail traders enter in the Wyckoff, and it also takes.
It's also what? It takes Wyckoff, did you say?
Yeah.
So Wyckoff, the understanding of Wyckoff and the way you guys should understand it is it's a schematic and it's a pattern that happens in the market when smart money is coming into the market. So when smart money come into the market with their money, they can't just enter a position. Like if I had like 100 billion or whatever, I can't just buy here. If I buy here, what will happen is my position will move the market up, which means you probably lose money. So if you're entering with like 2 billion or something, just example, your position will become 1.5 billion because you've actually moved the market to a higher price. So what they do is they mitigate their positions in. So they come in slowly. So they might buy with like 100 million. The price goes up a little bit. Then price will come back down. As you can see here, right? Then they buy again. It goes up a bit. Then price comes down a bit more. Then they buy up again. That's the understanding of Wyckoff. It's smart money coming into the market. And that's how, furthermore, actually, no, that's how accumulations happen. Sorry. So when accumulation is happening, right? When price is coming down, they buy up a bit. Then it comes up a bit. Then it comes back down. Then they buy up again. It comes back down. They buy up again. Then by the time they have all their positions in the market, you'll see the market start to move up. Okay. And it's the same thing for distribution. Distribution is them basically selling their positions in which price is moving up. They sell a little bit. Price moves up like this. They sell a bit again. And then once they're fully out of their positions, you'll see price start to slow down. And then if they want to, come in with sell positions even more, whatever, they'll push the market down even more. So that's the understanding of Wyckoff.
Okay. Thank you for the explanation.
No worries.
That was it.
Okay, so another question. Yes, bro.
Assalamualaikum, bro. You alright?
Alaikum salam. Yes, I'm good.
Yeah. So I remember, like, obviously, I always get stopped out, when I try, like, obviously, when I'm trading. Like today, I went to the bear chart. Obviously, I go into different charts today, like multiple, and every single one of them, I just get stopped out.
Yeah.
So obviously, I was asking the trading question, and I don't know if you know, but Yeah.
Okay,
So
cool. So was you on most of this call? Yeah.
yeah, I was, yeah.
Okay, cool. So is your name? Are you Khalid?
Yeah.
Okay,
So,
Khalid. So in terms, so the first thing that you need to like work on, yeah, is just one, because it could be one thing, it could be two things, it might be more. But the first thing, if you like eliminate the small stuff, yeah, and start doing things the right way, it will help you a lot. So the first thing that I've seen that you do is sometimes when it comes to your entries, for example, you'll do something like this. You'll have like a line here, which would be labeled chalk, and then you'd have your entry like this or something like this. And then you'd be like, okay, why was I stopped out? But I don't see how you entered the market or what you analyzed. So what I went through today, yeah, you want to use that same type of mindset in a sense where you're like, okay, cool. This is a supply zone. This is a supply zone that's been refined. If we go down to a lower time frame, okay, we can see what it's based off. So the 1 hour, right? So let me just write that in. So this is a 1 hour time frame, right? So what I'm expecting is if price comes into this area, from this area here, I'm expecting price to do something like this and then come back down. But I want to wait for my confirmations as well. And the confirmations that you'll be waiting for is the change of character. Okay. And the change of character is just a market shift. It's basically when the market stops doing what, like stops trending in a certain direction. Okay. So up until this point, market was moving up, going up. As soon as it broke through here, it was a change of character. Now, the change of character actually happened earlier. You could say it was earlier on a lower time frame in this area here. Sorry. So from this area here, and then you could say that this was actually the breakup structure. Okay. So as soon as it broke through here, my mindset should shift to be like, okay, we're not trending up anymore. We're trending down. Because you look at it, if you look on a high time frame, you'll see price moves like this, right? So it goes up. So these are the main swing points. Then it goes down. Then it goes up again like this, down, up, down, and then up, and then down. And then up into this area, you're seeing a change of character because now it's not going up anymore. It should have gone higher, but it didn't. So now it's coming back lower, right? So the idea is trying to anticipate and understand two things. Where's the market going to go next? How do we understand or try to predict or anticipate where market's going next? You understand where most of the traders are in the market. And we know from this area, there must be a lot of buyers in from here, this area here, because price keeps basically reacting off of this area. We also know somebody is selling a lot because we have this massive bearish candle here. So based on those two pieces of information, I either want to buy in this area or I want to sell from this area. However, I don't want to be the fool that's selling early or buying early. So you wait. So what we do is we wait for the Asian session to print because that's mainly a liquidity session. And when it prints, you want to wait for one side of it to get taken out. At the moment, our bias is bullish until this area. Yeah. So if I understand it's bullish, if this is my Asian session here, so let's just say this is my makeshift Asian session, I'll make the box gray. Price is going to basically be moving in here. I'm waiting for the low to get taken. I want to try and look for a demand zone in this area, somewhere that makes sense so I can buy back up. Now, it's okay to take that risk to buy here, even though there's an Asian low here, because one Asian low has already been taken. Sometimes it comes and takes out both. If I lose one trade here, that's fine. It's part of the game. I'll lose 0.5% or 1%, whatever, how much I risk. But if I enter again, then I can buy from this area here, so below. Yeah, so I can buy from below this area, and then I can look to, take my profits up here. But I think it's probably just a thing where you'll probably just need to change a few things. One thing I've identified is just the order blocks. So I've already spoken to you about that. So just like, marking up the marking up the right supply and demand zones. And then come back to me once you've kind of done that. You should see some change from that. Then maybe it might just be liquidity. Maybe it might just be like, okay, cool. Is this the right U-turn? Because your Wyckoff seems to be okay. Sometimes it's a bit what's it? Like a few points are labeled wrong. But the main thing that I've seen that you need to work on is just drawing your supply and demand zones correctly.
Okay. And is Wyckoff always valid on the charts, or do we look for Wyckoff every time we enter a chart, or do we just
When
look
you
for
say,
change
is it
character?
always valid? What do you mean by that?
I mean, like, obviously sometimes you can't find Wyckoff, can you, on the charts, like on a
Yeah.
5 minute time frame or a 10-minute time frame? You can't find it, can you? So like,
No, it's not always going to be there 100%. But when you do see it, like I said, it's a more of a pattern that you'll see. And like, for example, this is accumulation, but look, it's very like messy Wyckoff. So I've potentially gotten into these trades. You want to look for stuff that's clean and clear. That's what will be much better for you to enter. Does that make sense?
cool. Yeah, that makes sense. Thanks, man.
Cool. Okay, 1 sec. Okay. Yes, man, 1, 2, 3.
Bro, can you hear me?
Yeah.
How you doing, right?
Yeah, I'm good, man. How you doing?
I'm doing well, thank you. So I have 2 quick questions. Yeah, the first one is, well, we do a breakdown on Sunday and then we analyze from the higher time frames all the way down to the lower time frame, and then we gather a hypothesis that, let's say, the DXY is bullish. But then let's say on Monday or Tuesday, on the 4-hour time frame, I see that the DXY is bullish now, but I identified that it's bearish on Sunday.
Yeah.
So what would I do then? Would I stick to my bias or would I change it?
I would say change it. It depends, though. You have to be flexible in it. So, for example, look, we're bearish into this area, but if I see that price has broken past this supply, then of course I'm going to be bullish. So I'd be like, okay, cool. Let me wait for price to come back down and then buy. Yeah, switch it. Yeah.
Okay, I thought you just stick to it from like, I thought you just stick to your analysis that you've done on Sunday for the week.
No.
So
I would say you have to be flexible. You have to be flexible and adapt, because the thing is, like, the one thing that sometimes we do as traders is, and Nasser always like alludes to this, he says we marry our analysis. We're like, no, it has to be like this. But you have to be able to make a quick decision in the moment to change it and reanalyze quickly. So just be like, all right, cool. You know what? I need to change everything that I thought was going to happen and do this. It's like, and that's why when I analyze these, on the Sunday, I have 2 scenarios. Okay, if this happens, I'm looking at this. If this happens, I'm looking at this. But then sometimes both of those scenarios don't happen. Something else happens. Like, for example, we could just get consolidation for the whole week. And then that Sunday, I'm just like, okay, cool. I didn't expect that to happen, but you reanalyze. You want to be reanalyze during the week, throughout the day and stuff.
Oh, that makes sense, because last week I was doing that and then my bias would change and I'm thinking, okay, cool, should I just keep changing? But that makes sense. You clarified that question. And the other one is, if you have, let's say you saw Wyckoff distribution and you got to change your character, now you have your LPS and you're looking to sell, and then price is coming towards your LPS and you're about to sell now. But let's say on on a higher time frame, like the 1 hour, the 4 hour, you see that price change character to the upside. Would your sell be like short term? Would you target take profit as short term? Would you still say, no, I saw Wyckoff, so I want to look to take profit at a reasonable level because Wyckoff happened?
That's a very good question. Because
I'm backtesting. If price is coming towards the LPS, I'll just check the 4 hour. And if the 4 hour is like, it lines up with me selling, then I notice that when I let it run, it actually runs a lot of the time. But if it goes against it, then I'll say, is it short term? Like I'm coming from.
Yeah, no, I do. I would say go with because sometimes we can get caught in trading what we think as well. I would say stick to trading what you see and go with what the high time frame is telling you more, because that's more likely going to follow out. So again, with the same mindset as before, the previous question, you have to adapt. Do you know what I'm saying? So it could be a thing where you're like, you know what? I wouldn't recommend you guys doing this now, but once you get more kind of profitable, I would say you could even enter 2 positions where you're like, okay, I have my buy, but I'm going to enter this sell just in case. It doesn't mean that, okay, no, I don't know what I'm doing right now. It's just, this also has a higher probability. Or you can just weigh up the probabilities of both trades and then just cancel out the one that has less. But at the end of the day, anything can happen because it's trading at the end of the day.
Yeah, makes sense. Thank you, bro.
No worries, man. Yes, Latif.
So, how are you?
I'm good, man. Alhamdulillah. How are you?
Alhamdulillah, man. You know, when you have your OIs and it taps you in, what time frame would you go to look for a trader character? Would it be the 15 or any lower than that?
So I usually look between anything lower than 15. So I sometimes look at the 5. When I'm looking for a change of character, so for example, let me just find a real life example. So Yarimi University, yeah. So if I'm looking for this area here, it depends as well on how big the area is, to be fair as well.
Yeah.
Look, this is quite a big area, right? Here, this is a big area. So between here and here, that's about 50 pips. So I would be jumping, I'll jump onto the 15-minute and look for some type of change of character in here. When the price is, so actually, this is the best way I can answer a question. So I would look on the 15-minute for the structure. Okay, so I'm looking on 15-minute for structure and stuff. Yeah, I would identify, okay, cool. If this high gets taken out, then that would be my change of character. But I would go all the way down to the 5-minute, even lower, and then just be watching how price is moving in my zone. Does that make sense?
Yeah.
So to be fair, you can go as low as you want. Whichever gives you the best entry. What's going on here? Yeah, so whichever gives you the best entry. So it can even be the 1-minute. But I like to look for my change of character on the 5. It's not too low, but it's not too high. That's me personally. That's the one that I've seen most accuracy on.
Okay. Would you also look for a break of structure or just for chain of character? Then if it gives you a clean order block, would you just enter from this chain of character or wait for a break of structure as well?
So the idea behind waiting for break of structure as well, it depends on the type of trader you are. So I'm an aggressive trader. So I kind of enter just based off the change of character. But if you're the type of person that can enter off, you need more confirmation. It doesn't make you a bad trader, by the way, or anything wrong with you. It just means you wait for more confirmation because in your mind, it gives you more confluence and more confidence, and it makes it a high probability trade. So you can wait for break of structure as well. But I tend to enter off the change of character only, yeah.
Okay. One more question. You know, when you're analyzing the chart as well,
yeah,
looking for supply and demands, and you know how you keep saying like, but if keep finding like a clean supply or demand zone, can you just explain what you mean by clean? I get a bit confused on that.
So clean is sometimes you get stuff that looks like this. So let me just do this for you guys. All right. So I'm going to just work in this area. So sometimes, so let's say this is your candle, right? And it has like a wick like this going straight through it. Yeah. And then you have your bearish engulfing here as well. So let's just make this candle black. So what, oh wait, hold on. Let's put a wick into this as well. So like something like this, right? If you was to draw an order block, you would draw it like this.
Yeah.
However, what I like to do is, yeah, so you draw it like this. However, what I mean by clean is, it's better if you can go down lower time frames and find something where it looks much more simpler. So it's literally just one candle like this and one candle like this for a sell situation. So this is your bullish candle here, right? And you just draw it like this. Okay, you won't always find it, yeah, but you draw it like that, basically. This is what I call a clean area. It's basically a bullish candle next to a bearish candle, which engulfs it, and vice versa for the other side, which is a bearish candle next to a bullish engulfing candle. That's what is a clean order block. These are much more reliable to take trades off of rather than this because you don't know where inside it's going to reverse. However, these usually give you more accuracy and it's more accurate as well. So more accuracy and it's more reliable, sorry.
Okay, that answers my question then. Thank you.
No worries. Let me just remove this.
Yes, Ali.
Yes, how are you, bro?
I'm good. How are you? How are you?
I'm good, man. I'm good. So
My
what's your
question, yeah, is cool. So let's say I find a 20-hour supply, yeah,
Yeah.
and I find it down. Let's say all the way to the 1 hour,
Mhm.
and then on the 1 hour, it formed an Asian session. Let's say it's a supply formed an Asian session. Can I wait for price to wick past the Asian session to take liquidity, then change character, and then I can take my entry from the last point of supply? Or
Yes, that would be
Yeah.
the best thing to do. Furthermore, you answered your own question. Yeah, that's what I would wait for. Let's say this area here had a nice supply in it. I would wait
Yeah.
for the wick because I've been in situations, bro, where there was a nice clean supply zone here, very nice, yeah, like this, and I'm like, you know what? Let me just sell off this, and price tapped into it, came down, and then all of a sudden. And I've lost I lost challenges accounts like this. A massive wick just came, took out the Asia high, then it just dropped all the way like this. And I felt gutted because I was like, oh my days, I should have just waited for that high to get taken out. So that's why I don't mess around with the Asian high and Asian low. I'm content and happy missing a whole trade because the low or the Asian high wasn't taken out.
Yeah.
This trade here, I don't feel bad about it. Losing it last week because the Asian high didn't get taken out. My direction was right. I know that. I'm like, okay, I can analyze. I know which way the market wants to go. I knew it wanted to come all the way. My actually, furthermore, if you go back here into the Discord, there were people talking about Yarimi University, and I was like, there's actually trend line liquidity here in which it might get taken out. So be wary of that. I was telling the guys, right? But look at this price action, bro. Yeah, everybody pay attention to this. Look where it reversed from. It took all of this trend line liquidity out, all of this trend line liquidity out, all the way until here. Then it reversed. So this just goes to show when price is moving somewhere, it's aiming for other traders. And as smart money traders, we want to be on the other side of that. So for us, it's like, we're trying to be in the sell. Will we always be in the sell? No. Are we going to miss it sometimes? Yes. That's part of trading. That's fine. Don't get frustrated about that. It's part of it. But the time when you do happen to get into these type of trades, you're going to see amazing RR and you'll be happy with yourself because your discipline is getting rewarded.
Beautiful. One more question, yeah. Just to double check. So like I said, let's say 20-hour supply refined down to like 1 hour. Let's say price fails it on the 1 hour, so it's a full body close on the 1 hour, but on the 20-hour it only whipped and then it changed character on the lower time frame. Is that so valid, or is it because on the 1 hour it full body closed, it's not valid anymore?
Can you say that again one more time?
So let's say I have a 20-hour refined all day down to a 1 hour. Yeah. On the 20-hour, it only whipped past.
Yeah.
So it failed it. But on the 1 hour, it full body closed.
Okay.
And then it changed character. And then
what I would do is I would wait for the daily close. There is a strategy in waiting for the daily close because some people, retail traders as well, especially people that have day jobs and stuff as well. And this was something that I learned in retail, is sometimes when you wait for the daily close, it gives you the direction of where the market is going to go next. So for example, when I used to trade retail, we would say, okay, if the daily broke this high, as soon as the next day opens, just buy straight away because it's potentially going to go up. So what I do is if I was you, I'd wait for the daily close, because if it closes as a wick, then it shows you that that was more of a liquidity grab. Even if the 1 hour, 4 hour closed as a body candle, wait for the daily to close. Because if the daily closes as a wick, then more likely price is going to reverse in the other direction. And you can see this in analysis that I posted in charts like a few weeks ago, or even like a few months ago, where I was waiting for price to kind of see what it would do. Basically, I wait for the daily close. And as soon as the daily closed, it broke below, but then the next one broke above, and then the next one broke above that. And since then, look, the dollar has been going up. See, from this area here, it's just been going up. Just the dollar, right? Yeah. So it started pushing up, and then now it's coming down. Oh wait, no. Sorry, guys. From this area here. Sorry, I want to make sure I'm being accurate in my info. So when this happened, yeah. And furthermore, you can do this for the weekly as well. So the daily closed below here, yeah. However, I believe this was a Wednesday, right? So I was like, okay, cool. Let's see how the next day closes. So the next day opened up lower, which was very weird, considering it's not a weekend. Next day opened up lower, closed up here. Then I was like, okay, this left the and then the next candle closed above, which left the weekly as a wick. Can you see? Had this closed as a body, then we could have basically looked for an area to sell from and continue downwards. But this shows that it was a liquidity grab for these lows and this low here, which happened in May 2022. So the only reason why price went this low is to take basically anyone's stop losses that were here. It seems like, Rod, they went all the way back to take those stop losses. Yes, they did.
Beautiful. Thank you, Solid.
No worries, man.
Very much appreciated.
Yes. Yes, bro.
Assalamu alaikum.
Walaikum salam.
I got a question. You know, for new beginners,
Yeah.
what videos do you suggest they should rewatch constantly? Like, for example, I know Confluences and the strategy are one of the main ones.
Yeah.
But do you have any other videos that you suggest we should just keep watching until we basically understand?
So I've seen that most students get stuck on liquidity, Wyckoff accumulation and distribution, and then just understanding change of character and break of structure. So I'd say watch those ones, watch the group sessions as well. So the market week, the breakdown calls that we do, you can watch how to backtest as well. And from time to time, sometimes people jump on Trading Talk, and I would say jump on those as well. You need to kind of the thing with trading is you need to be as practical as possible. Theory is good, but it's like driving. You can't learn how to drive from a book or a video. So try get in the markets as much as possible and just basically fail your way forward. It's okay if you lose trades. That's one thing that some of you guys, you get disheartened when you're taking a lot of losses and stuff, but it's a testimony that you're actually trying. It's better to have something to look at than have nothing to look at. So if you're actually losing, you're trying, and you just need to basically work it out and see where you're going wrong. That's where you can ask questions in the Discord, ask us what's going on, etc., and kind of just go from there.
All right. Thank you, Barakallah Feek.
No worries. So I can see someone called iPad too, but I can't really see you like that. I think the it's quite dark. Oh, okay, cool. No worries, man. I can see you now. Yeah. Oh, 1 second. Sorry, I accidentally asked you to unmute again. Just leave it muted, yeah. The brother that just asked the question just now. Yeah. All right, cool. I think I remember you from last week, Kay, right? It's not unmuted.
Can you hear me?
Yeah, now I can, yeah.
Assalamu alaikum, my bro.
Alaikum salam, bro.
How you doing? You good?
Yeah, no, I'm good, man.
Alhamdulillah, bro. My question is, I've been trading for 8 years, yeah?
Yeah.
I've been in this trading industry for 8 years, but I don't see consistency in myself, right? So that's the reason why I joined this Yarimi University, because I've been seeing Yarimi's, I'm pretty sure everyone else has seen, his Snapchat, and obviously motivated to join his university. So, bro, I just want to know, I know about change of characters and break of structures and all that basics. But the one thing I'm confused about till this day, I know what a Wyckoff looks like on the Richard's website, like the drawing of it, right? But I don't know what it looks like on the real chart. So can you please, if you can, show me on a chart what a Wyckoff looks like?
Cool, no worries. Cool. So this is something that I struggled with myself, and believe me, like it took me ages to understand it as well.
Yeah.
The best way I can kind of transfer how I learned it and you guys can see it, because it's one thing seeing it after it's printed, but it's when it's printing, that's what you're asking in. Like, how do I know when it's actually printing out in real time, right? So the main thing is, I'm just going to focus on this area here, yeah, for the time being. I'm going to try and give you an example here. So we know that this is a what? What would you say this is?
This is accumulation.
Accumulation, yeah, calm. So we know that after it's printed, yeah, because obviously you can see all the points. You can see the selling climax, ST, etc., all of that. The spring is always the lowest point, and then you have the change of character, the SOS, sign of structure, sign of strength, etc. Basically, price is coming back in, and then it comes back down into the LPD, which it didn't in this case, and then it basically keeps going up, etc. And likewise for distribution, we can see that here as well. You can see sorry, did I say? I meant to say selling climax here, just in case I said buying climax. Buying climax, etc. And then the highest points, UT, UTAD, and then, you know, price coming back down, showing us weakness, comes back into this last point of supply, and then drops off. So the idea is, this is how I kind of identified Wyckoff. It's in the first point, and understanding, all right, cool, especially like buying climax, selling climax. When you want to start identifying Wyckoff, you need to look for the points in which it makes most sense that what you're going to label is coming next. So for example, when price was coming all the way down like this, yeah, it then started, you know, ranging like this, yeah. So for me, I would count this as a selling climax, yeah. If I was just kind of like pointing it out, I'll be like, okay, this is a selling climax right here, yeah. Why? Because we've reached the climax of the selling, basically. It looks exhausted. Then you have all the retail traders or all the traders getting lost up in this area thinking, yeah, okay, cool, we found a strong point of support, let's start buying. So these guys start accumulating their orders, buying. And we know that their stop losses are below this low here like this. So within this area, sometimes it can be lower, okay? I might get flocked for this, but sometimes it can be lower. Sometimes the secondary test is inside this area. Sometimes it can be lower, okay? Like this. How do we know? Okay, you can't know, okay? You can't predict the future, etc. and all this. Sometimes people even call this a STMB, okay? Secondary test, I don't know what the B stands for. But let's go with what we teach in the course, which is the secondary climax. The ST is there as well, okay? Now, price then breaks down lower, taking out all of these guys, okay? And the trend continues down. So now this is over a long period of time, actually, furthermore, if I look on the 4 hour. But then what you want to do is be like, okay, I might have been wrong on that area, yeah? So what you can do is you can relabel. So I tend to move my labels down as price keeps going down, right? So then I'll put my SC here and ST here. The only way you can know if your Wyckoff is full on valid is if you get that change of character, i.e. that sign of strength coming in, which basically it shows that the market has shifted. Yeah. Earlier on, I was talking to someone regarding the Wyckoff, like, why is this all happening? It's because smart money is coming in. So price is going down, they're buying from here. Okay. They got one position in. Okay, but they still have like millions more to add. Price comes back down, they buy again. I got another position in. Price comes back down, they buy again. Price comes back down again, they buy again. And then finally, they know that there are stop loss orders below here. So they sell the market, they forcefully push it down. They buy again down here. The market gets pushed up. They probably buy with a lot of momentum, which is why price pushes up a lot. And then the aim is they come down to mitigate this, position that they manipulate the market with, okay? And they kind of did a little bit of that there, but there's still some deeper mitigation they still need to do. And then price moves up like this. So only after you have seen the spring can you really be like, okay, cool. My Wyckoff starts from here, and you can kind of readjust your labels and start labeling everything else and be like, okay, cool. This is my LBD as well. I can start from here as well. Sorry, LPD. So let me wait for this. Okay. Now I'm going to go above and beyond and actually try to, again, it's easier to kind of show in hindsight. Yeah, I know that. And what I'm going to try and do is I'm going to try find a chart, and I'll try and basically label Wyckoff like in real time.
What was that time frame you was just using just now? Was it like a 4 hour?
Yeah, 4 hour. So if I just do something like this. Okay, let's go back here. And okay, I'm going to start from here. So we agree that I don't know what is going on in this area. Yeah? Okay, cool. So I can see that price is coming down. Yeah. All right, I'm going to go on the daily. Okay, let me just remove all of this because it's going to confuse me. I'll put it back later. So, okay, cool. We're in this area. It looks like there's been a spring here on a larger time frame. This was on 12th of March, 2020, and we're coming into this area. I don't know what's going on, but it looks like we're seeing some accumulation here. I might be wrong. It might be a distribution. Okay, but on a lower time frame, there's a accumulation here. What I want to see is if price will basically reject this supply zone here. So let me let price play out. Okay, so no, it's doing this. Let me wait a bit more. So when price is moving like this, we're not really sure what's going on. Okay, cool. So now I believe we may have a distribution in play. So now what I would do is, okay, this may be, let me wait for price to play out a bit more actually. Okay, this may be my buying climax. Yeah, and then this might be my ST here.
Where's the preliminary support for that part, the first part?
Preliminary support. So usually I'm not gonna lie, for me, I start with the buying climax. Maybe this preliminary support. So you're talking about the PSY, right?
Yeah, you know that very first part.
Yeah, so it could be here. I just say buying climax because I'm seeing I saw a lot of momentum from this area. Yeah. And then when price came back up, it tested this area, which could be the ST. And this could be the UT as well. Okay. I'm not sure yet, but this is what I mean by being flexible. Because look, if I draw it, I could move these like this as well. I could move it like this, but then price is just going to keep going upwards. The thing is, you don't want to get attached to a labeling because what can happen is by the time you think it's a UTAD, it's not. And now you've been taken out the market. And you basically just keep saying, okay, no, this is the UTAD. No, this is the UTAD. No, this is the UTAD.
That is the problem I kept having. I'm not gonna lie.
So, okay, let's see what happens here. So we see price moving down. Okay, so check this out. If this closes below this, that will be a change of character, and I'll move and I'll label this as the UTAD. If it doesn't, then I don't need to relabel anything. Okay. Okay, but it wicked like this, so and then it came straight.
Yeah, so you see with that wick, so if it doesn't close as a body, that's not classed as
that's not classed as a change of character, no. Oh, so you can see it's still going up. So I can possibly move this up like this. I might keep these the same. Okay, I'm waiting for this area here to get taken out now.
What, the complete low of it, yeah?
Yeah. Cool. Now we have had a potential UTAD. So what I can do is I can be like, okay. UTAD, and I put a question mark because I'm still waiting. And that's only because of the way price is moving like now. It's creating liquidity around this last demand zone. Yeah, so it's been mitigated already, but it's creating liquidity around it because it keeps basically tapping into this area. So either what we're going to do is we're going to get price moving up again, in which this UTAD was wrong, or it's going to move below. But let's see what happens, yeah? Cool. Okay, so now it's broken. So now that confirms that this UTAD was correct. And this is my change of character. right here. So now what I'll do is, okay, that's demand has failed. And what I can do is I can either enter off of this supply right here or this supply up here, although it's kind of been wicked already. These are the two areas I look from. However, what I would look to do is maybe just sell off this area. Obviously, it's not full on accurate. There may be like supplies in this area, but either this one or this one. So let's see what happens next. So obviously I didn't get tapped into it. Unfortunately, that happens as well. And by that time, yeah, remember, like this is just one time frame. This is 4 hours. That's why it's playing out quickly like this. But in reality, in real time, you'd have way more time to basically find out what's going on. Inside this area right here, I might find there's a change of character. If I go down to the 1 hour, if it lets me, there'll probably be Asian highs here. Yeah, see, look. So there's an Asian high here that got taken out, and all we would have been waiting for is a change of character on a lower time frame on the 5 minute in this area, which I know for sure has happened because, hold on 1 second, let me take off this magnet. I know for sure it's happening here because of this wick right here, because of this wick. So basically something happened here where it came down and then went back up. So for sure, if you're watching this area, you would have probably got a sell within this area here. Understanding that the Asian high got taken out, now I'm going to sell down below the Asian low or lower if I choose to. And that's how you should be kind of looking at Wyckoff. I hope that helped. Yeah, obviously, it's going to take more experience, but it's basically in that format.
Okay, cool. Yeah, I understand the basic concept of that. And then one last question as well.
Yeah, go ahead.
So you see the secondary test?
Yeah.
For it to be a valid secondary test, does it have to make a lower low after it does that secondary test?
So you talk about here and here, yeah?
Yeah.
Because the idea of the secondary test is that it's creating liquidity. It's testing the buying climax, but that's just to create liquidity so that they can just basically take it out.
Okay.
Which happens.
Seeing. Okay.
But don't worry, you'll get it. It's just about like transitioning over and kind of removing those old concepts. Sometimes they might creep in, like you'll still be like in the back of your mind using channels, support resistance, you know, all the retail stuff, flags and stuff, like on accident. But you have to basically keep like reincorporating and reinforcing the new stuff that you're learning now.
Okay, fair enough. All right, then, yeah, I'll definitely bear that in mind, man.
No worries, man, anytime.
Thank you.
No worries, man. Okay, cool. Let's have the next question. Yes, Suleiman.
Assalamu alaikum, Saleh. How are you?
Salam, good, man. How are you?
Alhamdulillah. Saleh, do you mind going back on that 4 hour time frame we were just on just before this?
What, on the same pair?
I don't know if it was exactly the same pair. I don't think it was. It was just the one you just done before this.
Okay, cool. No worries. Hold on.
And I'm just like, because the schematic you showed on that 4 hour is exactly what I would get on a 2 minute for my Wyckoff accumulation. The thing I wanted to ask is that, you know how, like, I don't have an issue when selling, but when buying. So say you would get your spring on a 2 minute or the 1 minute or the 3 minute, and then after you get some sort of bullish momentum, then you get a bit of a retracement, then you see your chuck after that, literally where you got your imbalance.
Oh, it's on USD, yeah. So yeah, gone.
Yeah, so say your spring is that the brown one all at the bottom, then you get a bit of bullish momentum, a retracement, then you will get your chuck where that imbalance is. Where would you put your buy limit? Because me personally, I would always put my buy limit up where the spring is, because there was always going to be an imbalance or an order block. More time it's going to be an imbalance where the spring is. Do you see where I'm coming from?
Mm-hmm. Okay.
And I won't get tapped in, but then after I'll always find a re-entry anyway. But I just like want to get in at the first point. You get what I'm trying to say?
Okay, cool. So that's totally fine. And sometimes you won't get that entry. As you can see, look, the best entry would have been here, but obviously it didn't come in. And then the next best...
I can't see it. Like, nah, like the screen's so small.
Oh, okay.
Maybe, yeah.
Oh, is it because you're on your phone, innit? So, all right, cool.
You know, I was on my laptop and I couldn't raise my hand for like an hour. I'm thinking, yeah, I have to go on my phone. I'm not too sure how to use it.
No, that's fine. That's fine. All right, cool. So what I'll do is, yeah. So sometimes it's hard to really kind of anticipate when this will happen. And this is where your rules come in, because it's a thing where your rules will help you a lot more than sometimes trying to go for everything, okay? Or being in this type of situation. So for example, I have a rule that I'm going to enter from the best place possible in the day, unless the next day gives me an opportunity. If it doesn't, then it's done for me. However, you could, if price didn't come here, right? So there's an order block right here as well. Yeah. And this could have been a zone for you to enter from as well, in which you would have got that entry. I wouldn't have entered from there because for me, not that it's not wrong to do this, like to enter from here, but I've told myself based on how I trade, I'm going to get the entry that basically calls the change of character, and that's it. However, based on what you just said and what understanding your question is where would be the best place to enter, or is it okay if I enter based off the order block from the spring or from the change of character, right?
So yeah, exactly.
So I would say both are okay, to be honest. Go for both, because go for one trade here and then go for one trade here, especially if you're seeing that sometimes you're missing trades because you're like, nah, I want the entry down here. If you're knowing that, especially if you're missing like more often as well, because it's more of a, like, what is happening more frequently? Is price coming here more frequently, or is it coming into your, chalk zone more frequently?
Not gonna lie, like,
yeah, go for the chalk entries as well, bro.
Yeah, no, I hear you. Cause I'm not gonna lie, I took 3 times where, I took 3 buying trades anyway today where it all went off the change of character, not the spring. But alhamdulillah, I was able to get re-entries. But I was just thinking, obviously, like from the schematic that Yarimi showed on the thing, you will see a spring, you'll see like a bullish momentum, bit of a retracement, then you will see a chalk, and he will go off the chalk, which is your last point of supply or last point of demand. But obviously, in the video, he doesn't really account for if there's an imbalance below, or if he says it's void where you don't need to think about it or anything like that. But I realized that it has gone off the truck anyway for me this week. I was able to get a re-entry, but obviously I just wanted to reconfirm where would you go off? Because I don't want to.
Yeah, for me, I go off the truck, but that's based off my rules. Yeah, it doesn't mean that I go off the spring. So basically how can I say actually? So for example, in this case, I would try to enter off the order block here. So I'd wait for price to come into this order block here. Obviously, it reacted off the imbalance. Okay.
Yeah.
I would wait for price to come in here. However, and in this case, see my type of entry, I didn't get tapped in, but I also didn't lose based on this chalk entry.
Okay.
So it's like a double-edged sword, basically, like where you're never going to get it perfectly. But what I kind of do to kind of like go through this kind of challenge is I would enter off both. So you can have one entry here. You can do 0.5 here if you want, or you can do a 1% entry. If price taps you in, that's fine. You're in the trade and you go forth and you take profit after you've seen your risk reward, or you can wait for the other one. But I'd say go for both, bro. Just go for both of them. Because at the end of the day, if you're in the trade and it's running, then you're in profit.
Yeah, you're right, 100%. No, I appreciate it, Saleh, honestly. Thank you.
No worries, man. No worries. Any other questions? Yes. Okay, 1 second. Let me just unmute. All right, cool. Yes, Brother Shamake.
Yo, Assalamualaikum, Saleh.
Yes, walaikum salam, bro.
Yeah, but I had a couple of questions, in it. First
one, go ahead.
So let's say I marked out my point of supply and I'm waiting for it to tap in.
Yeah.
And then but when I see when I go on like a smaller time frame, I see that there's different distribution going on. Let's say I thought it was accumulation, but then when I go closer, it's going the other direction. What do I do then? I just adapt to it, or should I just wait and see what
Now
happens?
you want to pay attention to the high time frame, because look, this is on a high time frame basis, this is accumulation. But let's say on a lower time frame, it may look like a distribution in this area.
Yeah.
So I'm still kind of paying attention to the high time frame, and that's why you look at the high time frame, you label out where, okay, cool, this is where my high time frame, you know, chalk became valid, and you want to be aware of that. So I'll be like, okay, cool, this is where my high time frame chalk became valid. So from here, so basically, no matter what happens, I still understand that price wants to go up, but I can possibly find some sells within that area, if that makes sense.
Yeah.
So you want
that's what I
to,
mean.
yeah. So you want to do it like that.
Okay. And the other one is to do with I'm find it hard to understand, like the lot size and the pips and all that, and the ratio. How do I calculate that? Because I feel like sometimes I refine too much. Is there such thing as that? I don't know, but I feel like I keep refining, and I'm not sure if I've got like the right ratio, or if I need to go any like lower or anything like that.
Okay, cool. So when it comes to that, right? What I recommend you guys use is the cashback Forex calculator. It helps. This is how you should do it. So let's say I want to sell from here, yeah. So you adjust your thing like this, and I'm gonna sell all the way to this area. Really, it doesn't really matter the risk, whatever, all that kind of stuff happens. In terms of this number, it's the stop loss number that you want to pay attention to. So what I'm trying to figure out now, hold on, let me just adjust my one, because so what some people I see them doing is basically using this area, but you don't need to use this area. This can be a bit more confusing. Like they put in like, it's more confusing. So hold on. Okay, cool. So from here I can see that, okay, based on this, what's this saying? Sorry. 7837893. Okay. So based on this point here, this number here will show you, the pips. So it's a 10.9 pip stop loss. Okay. So let me sorry, 1 second. Chart is gonna freeze for a bit. I'm just gonna basically get the cashback Forex calculator. Okay. So it's a 10.9 pip stop loss, yeah? And if you share again.
Because I thought, wasn't it $10 per pip?
Yeah. But you know what is, different brokers have different kind of like contract sizes and stuff. That's the issue. So sometimes you put $10 per pip, but their contract size is different. Sometimes, like for example, I've traded on a prop firm where 10 lots was kind of similar to 1 lots, but you have to adjust it. So you always have to check the contract size before you start risking or whatever. So let's say this is a $100,000 balance. So 100K. Yeah, 1% risk. So as you can see there, the lot that I should trade is 9.1, which sounds about right. Yeah, that would be 1%. And that sounds right because I do it without, but this just because of my experience, I know how much it is, but yeah, 9.1. That's how you do it.
It's different for each.
Yeah, it's different for each pair. So obviously if you go into USD JPY or something else, so let's do USD JPY, yeah? Oh, why isn't it coming up? So some people trade this and the pips on this are different as well. Okay. So if I quickly try to do USD JPY, I don't trade USD JPY, but for sake of example, I'm going to put it up. Rwanda. And this is the last question, guys, yeah? So let's go back to the trading view. All right, cool. So let's say now I want to sell from this supply zone here, yeah? So I want to sell based off of this. This is going to be my stop loss just above here. And I'm going to target below here. Yeah.
Yeah.
Okay, cool. So this, as you can see, it says here 75.7. So that stop is quite big. I think it's because I'm on a high time frame, but yeah, it's probably because I'm on a high time frame, but that's fine. Let's go back to the calculator. So stop loss is,
But let's say I refine it and it's like less than 9 point whatever one. Is
yeah,
that right as well?
yeah, that's fine. If you refine it, that's fine. So 75 pip stop loss, 1%, calculate. As you can see, it's 1.7. So yeah, that's how you do it, bro.
Okay, yeah. Okay, I see. So there's no issue with that refining it too much.
Yeah. No, there's no issue with that. Obviously, you want to refine it on a 100K account. This wouldn't be a great trade because 1.7 would take ages for you to make any type of money. But yeah, if you can refine it down to, that's why we say anything below 10 pips, you can just go straight for it. Because look, if it was a 10 pip stop loss, you're going to see 13 loss, especially on a funded account. That is good.
Okay, all right, that's fine.
Yeah.
So I'll just use this. What's that? Cashback Forex?
Yeah, cashbackforex.com. Position the lot size calculator. Yeah, not the pip one, the lot size one.
Lot size, yeah. Why is that different?
The pip is just calculating how many pips. Some people were using this in the beginning, but then I realized, then I changed it over to the lot size one. So this is the one, because this is the one that calculating your risk, not the pips, in terms of how many pips you're gonna get. Yeah, it's the lot size one. And sometimes you may see an option here where it says calculating MT4. In case it gives you some weird kind of question marks and stuff, make sure you click on calculating MT4.
All right, no worries.
Okay. All right, no worries.
Okay.
No problem, guys. Well, I appreciate you guys jumping on. Hope you guys enjoyed this Zoom call. Hopefully Nasser gets better as well. So you can send him your, get well wishes or whatever in the Zoom call. But yeah, hope you guys were able to benefit from this. Any questions if you guys have, just ask in the Discord.